what I like to think about as infinite banking is like you're buying a house, except you're the house. Know your goals. The problem is most people, they don't know their own goals. The world is in chaos. It's confusion, haphazard, anxious, overwhelming, and stressful, right? And so we have to be adaptable and just finding people that actually align with what you want to do and are actually doing the stuff, not just saying you should do that.
We were in negotiations.
Investing in real estate.
They're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. Once again, I'm back. I'm so excited to be here. I'm loving this podcast because we're helping real estate investors. So if you're out there fixing and flipping, you're building a rental portfolio, trying to build wealth, we're here to help. Or if you're providing content to real estate investors, you're out there educating investors, this is the podcast for you. I have a super special guest with me, Brandon Neely, all the way from Cincinnati, Ohio. He is a financial planner, well-versed, sounds like. I'm excited to get to know him a little bit. But he's an entrepreneur, proud father, CEO, and he wants to use his knowledge and his skills and what he's been able to accomplish in his life to help his clients navigate to a great financial future. So, Brandon, welcome to the show, man.
Hey, thanks for having me, Kevin. I love talking real estate. I mean, literally, I think we're all in the real estate game. Even if you rent a house, you're in the real estate game for somebody else, I guess.
Yeah, I want to get into this because I know you're the financial planner. And sometimes when we get a financial planner, there's some controversy between what type of investment is the best investment. And I just met with my team today, Brandon, and we have a marketing meeting every week. And the best performing video that we had on YouTube, which we're still learning here, but it's about 100,000 views, let's say. It's right around that number. And the video was stocks versus real estate. Which one is better? So I'm excited to have this conversation with you. But before we do that, you do have a passion for real estate. So you might be a little different than some other financial planners. But let's go, take us back. Like, how did you get into finance to begin with?
Yeah. So first off, I used to own a brick and mortar coffee shop. My wife and I started that because we wanted to make a difference in the world, change the world, ethical economics and community.
One cup at a time.
Yeah, one cup at a time. That was our slogan. Change the world, one cup at a time. And what I learned in that is it's one really hard. Also, at one point, I was not the landlord, which I wish I would have been, owning the real estate because I would have been able to control the environment a bit more, which I'll get into. But I ended up selling that business, and it was because all of a sudden we had a roof being repaired, and the store got flooded because of a freak storm, and all this crazy stuff happened at the same time. And I'm like, I'm out of this. I gotta sell. Want to sell. And so I sold that business and then said, okay, now we're selling this business and we have a baby coming. And my wife's like, you need to go get a job. And I was like, I'm not employable. And so, but then I was like, all right, we have a kid coming. I better go get a job.
I've been there.
And so I interviewed to work with my mentor. And he said, you're too entrepreneurial. I can't hire you. And then a little later, he comes back to me and says, I have an idea. How about you and your wife start your own agency and I'll coach you? And I was like, that sounds better. I just didn't know that there's a lot of opinions about finance. All I knew is the system helped me to sell my business, not close my business because of what I've done. And then I get into this financial world and realize that there's a crap ton of people, I would swear, but people who say things like stocks are better than real estate or blah, 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 and all this clickbaity type stuff out
You
there.
could say shit. That's okay.
Good, because I wanted to. And seriously, for us, I'm like, the reason I'm in this, I'm an educator, is there's a lot of false education out there, I guess you could say. Misinformation, if you will, and for me, this system, this infinite banking profit first system, helped me to again sell my business, not close it. And now I'm just helping other people understand and learn that they should be their own bank, if you will, learning how that works because every one of us is in that industry, whether you think about it or not.
Yeah, in fact, you even put in your 2-sentence bio here that I ask our guests to complete. You are a bank on yourself professional. So I was going to ask about that, but I'm assuming I still will ask about that, but I'm assuming it's your infinite banking that you mentioned.
Yep. Yep.
Cool.
Yeah.
Let's talk about that because I think a lot of our listeners probably do understand that because it's not new anymore.
Yeah.
But maybe some of them do not. So why don't you tell us quickly what is infinite banking?
Yeah, I will say what it's not, because there is a lot of stuff out there that is saying it isn't, it's this, and it's an IUL type product, but using the market. And I would say Nelson Nash, the founder of Infinite Banking, would not go with that approach. So when people are marketing, and there's a lot of pizzazz out there on this concept right now, because all of a sudden, I don't know why it picked up steam, but a lot of agents are out there saying I can get a really good commission and sell an IUL product and never be around. For me, I want to make sure that I'm working with my clients where they can use the cash value in their policy without any risk to go buy other assets. So what infinite banking in its essence is a life insurance policy that you can build up cash value that you can leverage and use to buy other assets. One person calls it the and asset. You can do this and. So the way I kind of think about it is you're in real estate. I mean, I know you talk about this, right? So we're the real estate educator projects, right?
Mm-hmm.
Well, what I like to think about as infinite banking is like you're buying a house, except you're the house, right? You are the house, you're the asset. And then you can borrow against the asset without um, anybody asking you, do you have a W-2 job? Are you making enough income so I can give you back your equity in your house? You can pull the equity without any problem, go do something else. Now, the life insurance company will say, oh, yeah, well, there is a cost, a low interest cost to borrow that money, right? It's 5% or 6% simple interest. But I know that's better than what most places are asking for when you borrow from a bank, for example. So it's just about thinking like the bank, and then you're turning around and using it to control more assets. It's a pass-through entity.
So you're borrowing money from your cash value life policy, and that's why that's basically what it is. And you could use that money for anything you want.
Yep.
So the cash value life policy is typically invested in blue chip type stuff, right?
Or it's some in the market, maybe. I don't do again IUL. I think it's guaranteed. That's the power of the contract. It's a guaranteed growth, and then the dividends will go back into the policy and build up the policy.
Okay.
And so, power of a contract. That's in essence the most powerful thing when you buy a house, right? We look at the contract before we sign, or we want to make sure we're first lien position if we're doing note investing, right? So we want to think about the contract.
Okay. So you're pulling money out of that agreement basically into a new agreement, which is a loan from and then you use that money to go out and profit from. Hopefully you're not out there just blowing that. But if you're out there buying
hopefully not. Or I've used it to advance my former business. You know, the flood that happened, I had to overcome that. I used it, paid myself back. The founder of Infinite Banking says, "Don't steal the peas. If you're borrowing, pretend like you're the banker, right, and pay yourself back. Like be that diligent." And then I used it to buy my house 20% down on my personal residence. And the reason I did 20% down was because then I had no PMI insurance, right? And then I was able to capture that money. And then I did another one. I used my policy to buy my office condo. So it's my savings for my business, and I happen to buy my office that I'm in now, or the condo at least, to then be the landlord and the owner, or landlord and the person that's what do you call it, paying the rent. Right, I'm both. and then it offsets taxes, which is really good. So just
So
playing the game.
The interest rate, let's say 5% using your number. So if we use 5%, that doesn't go back to the policy and me. I'm not benefiting from that. That goes to the insurance company.
So as you're borrowing, the policy will grow, and you have to make sure you find the right agent, right? So I use non-direct recognition companies. So my policy will grow as if I never touch the money, right? And then so it'll grow dividends as if I never touched it. Now on the other end, the loan cost, if I used $100,000, my loan cost would be $5,000, right? So I know there's going to be an arbitrage. So my IRR, if you will, might be 2.9 or something like that because of dividends on one side, the loan interest on the other, right? But in the end, what I like to think about is as I pay it back, it's going to go back into my cash value that I have available to then go and do something else.
I see. So it's going to continue to earn the income it would had you not had the loan. And then the 5% is profit for the insurance company.
Yep.
So
it's just like a bank would. The banks do it all the time. Same thing.
So it's a legit interest charge. So as an investor, real estate investor, am I writing that off on my taxes as an interest expense?
Depends on how you set up the policy. So I use it as a personal life insurance. So I don't want to write off the interest. I could. It just depends. You want to think through, and if it's worth that. I've used my policy, one of my family policies, as a note, and I give it to somebody else. $50,000. So I know my cost of my loan is 5%. I borrowed it out to somebody else at 12 plus a point on the front end, and then I'm first lien position. So then it's lazy money that was going to sit there anyway. It's my savings, and I'm just making 7-8% pretty much guaranteed. I mean, you can never say with real estate anything's guaranteed, right? But I am hedging my bets by making sure I'm first lien position.
Yeah, so that is our business. I've been investing in real estate for 22 years, and I learned early on the safest place to be in the real estate investment, if you're looking at the capital stack, is that very first position. Yep. So I have gravitated towards that. Now I still buy properties and I still do all that, but my business, Pine Financial, is only senior lien lending. So I know exactly what you're talking about there, and the arbitrage is exactly what banks do to become the big freaking buildings you walk into now. The reason they got there is because of arbitrage. So they understand it as well.
Yep.
Coming back to this tax question though, Brandon, I just want to make sure I understand this correctly. So you're making a 7% spread, something like that.
Yep.
And that's great if I'm able to deduct the expense side. If I am not, and I'm making a 12% note rate and I'm in the high tax bracket, you add state, especially in higher tax states, you might be at 50, maybe even higher percent of your income going to governments. So that would bring me down to a 6, right? So now my spread is between 1 and none. Does that still make sense?
Well, I think that's why you have to do a full financial analysis, right? And why sometimes you want to buy more actual physical real estate, maybe to offset the taxes, right? Because it's all one wallet, in my opinion. I just know, like, and that is one piece that I'm like, it's okay. But I also run a business and I buy a lot of crap that, in my other side that offsets taxes, then, and so also payroll taxes versus interest on a loan is different, right? Or even paying yourself rent is different and is not. And I'm not trying to give tax advice. I'm not a CPA, but it's thinking holistically, right? For me, and my wife's the CFP, right? Certified Financial Planner. I like controlling cash flow. And there's not a lot of CFPs that are in the real estate game,
right?
Because there's not a lot of money for them, and they would rather you divest and put it in Tesla stock that they control. Whereas for me, I'm like, hey, I love real estate and understanding how the game works. you want to lower your taxes, but you also want to make a lot of money. So my job as a business owner is to make a lot of money, and my CPAs is to lower my tax liability. And sometimes it's buying an asset, right? Like a condo or something. And sometimes it's just doing notes because that's not the goal.
Okay. I do want to move on from the infinite banking, but I had another question for you first.
Oh, cool. Yeah.
Because you're saying the way this is so powerful is because of the ability to borrow.
Mm-hmm.
So it's like you're able to free up the cash in your life insurance policy. You have the similar benefit with some 401k plans.
Yep.
So, but the interest that you pay goes back to your retirement in that scenario. So tell me some of the benefits or differences. Let's start here. Some of the differences between borrowing from a 401k against borrowing from a life insurance policy.
Yeah. So sometimes, again, it's still locked up in a 401k plan. There's the self-directed IRAs and all that fun stuff. The problem is you can't, like with self-directed, possibly, you can't do any like self-dealings or things like that. So it's very limited in what you can do. You can borrow against your 401k. The way I kind of think about it is I pay it back. I'm going to reuse that money again in my life insurance policy for retirement too at some point, right? Possibly, right? It just depends. And what I think is kind of different is the way the policies are as a rich man's Roth, meaning I can put in 50 grand to a policy and pay my taxes now versus a 401k. I don't know what the tax rate. It could be a Roth 401k, but there's limitations. And again, um, my wife's the CFP. I'm like on this side. I just kind of think, where do I want it to end, and do I like to have control? And the problem with taxes later versus now is, I don't know. What do you think? Do you think taxes are going to go up or down?
Yeah, I ask that question all the time, and I could tell you it's pretty universal, people's opinion on that.
Yeah. So the way I ask this question is it better to be taxed on the seed versus the harvest?
Yeah, that's interesting.
Government will say, oh yeah, go ahead, defer it till later. Of course they're going to say that because they get more money.
It's the classic Roth to traditional argument. Which one is better?
Yeah.
Most people say Roth, right? But I don't know if that's true. I mean, you're slowing down your growth because you're putting a smaller initial investment amount.
And the answer for me is it depends.
It depends. That's the right answer. Yeah, I agree.
Anybody asks me and wants to, Dave Ramsey will love to hate on us. I'm like, it depends. I don't know your full picture. And a policy or any of this should feed into your bigger goal. The problem is most people have never actually thought about goals or plans, or they don't even know how to read a dang P&L statement to know if they're profitable. And they're like, oh yeah, but I have 100 houses. And I'm like, yeah, but is it making you money? And they're like, yeah, but I have 100 houses.
Right.
Look at this. And you're like, okay, it's not what I said. Profitable.
So are you saying, well, there's a difference between profit and cash flow as well. But are you saying, well, here's what I'm hearing, and then you correct me if I'm wrong here, Brennan. Cash flow is priority number one.
I think it should be for a lot of people. In general, like you want to make sure that you're not screwed. Like, hey, I got this really great asset, but I can't eat and I can't pay my bills. Well, then that means you go bankrupt, right? So I think cash flow,
even if you're profitable.
Yeah. And a lot of people, when people say, "Oh, I'm an $8 million or 8-figure business," I'm like, "How much are you taking home?" Like seriously, that I would like to know that more.
Exactly.
And that's why I love the profit first system, is it at least buckets that money. So then you know if you're good, and you should know your interest rates. I talk to real estate investors a lot of times, and sometimes these guys are like, yeah, I don't know what the interest rate is. I just borrowed from this guy who's a private money deal, and it's at 15%, but I'm going to make a lot of money. And you're like, you aren't. Actually, they are, because you didn't actually analyze the deal, but you were told, anyway. It's crazy.
Yeah,
stuff.
that's sad to hear that, because we're private lenders and more expensive than banks. We're 12%. But we run profitability analysis on all of the deals we do in our underwriting process. And if it's not going to be a profitable, good, solid profit for our client, we don't do the deal. I don't even want your interest. If you're not going to make money, I don't even want it.
And you're better. And some people might say, you know what, that's too much work for me. I'm going to go to the shark down the street instead, who's going to give me that money because it's easier. And the reality is running profit and making sure it's sustainable. Honestly, we should be thinking. I mean,
Of course. I mean, both of us, we have clients that are trying to utilize our skills to make money. I mean, that is the business we're in. So if we're not helping them do that, we're doing a disservice. And that's the selfless response. The selfish one is they'll never do business with you again. So, I mean, either way, it doesn't make any sense to treat a client like that. And I'm not trying to go off on a rant here, but it's just when I hear this, I'm like, that's very surprising that you see some people go to the lender down the street that really doesn't care about them. I just don't see that very often.
It's a quick fix. I mean, I'm part of real estate groups and I see that. And you're like, oh yeah, I'll give you it. Here you go. And you have to make sure when these clients sign, they aren't just, oh yeah, now I don't know, with collateral assignments or those kind of things that happen. It's just, there's a lot of Ponzi schemes, a lot of usury out there, and a lot of times people are looking for hope, looking for a quick fix, and they think that this will happen or that'll work, and rose-colored glasses, right? And so us as bankers, even banks, seriously, a lot of banks have used people, and we go to them still, right? Just learning.
The money is important. This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. For real estate investors, this is something that's been pretty universal across every guest that we've had on this show. I think 100% agree on this, actually. But one of the top maybe 2 or 3 keys to success as a real estate investor is building the correct team.
Yep.
The people you surround yourself with will make or break you. So what you're saying is, if your trusted advisor, your team member that's providing capital to you isn't on your side, right? You're not having the same aligned goal, it could be extremely detrimental. So building the correct team has got to be one of the priorities for success.
And I think what you just said is, if you know your goals, the problem is most people, they don't know their own goals. They haven't. I mean, when I do financial analysis all the time, I ask them, what's your dreams and goals? Where do you want to be in 5 years? And they're like, that's a great question. I'm like, how's that a great question? That is just, should be obvious. And even when I work with a lot of clients, they're like, oh, I'll be successful when I have 100 deals, 100 properties that is cash flowing, and I'll get that, and that's going to be amazing. And then you talk to the next guy, and he's like, I'll be successful when I sell all those headaches, and I'm just the bank. And you're like, those guys should talk to each other, but I can't, and you see that, but in the end, it's about knowing your goals and finding the team members that can help you. And for me, I'm a safe money guy, like building it in a safe place to then deploy it out in riskier places. And I will say all day long, if you invest in yourself and then deploy in things you'll have a bigger investment.
So I have a very valuable story that I could share about goals. It's probably fun for the listener, terrible for me. And I'm open to doing that. But before that, I'm curious on what you think about the goal setting process. I agree with you. It's probably the number one question you ask. How do you know if you're successful if you don't know what you're trying to accomplish? So when you talk to someone and you're saying, what do you want to be in 5 years? Or what do you want to try to accomplish? What are you trying to get out of this relationship? Like, give me some advice. How do I know that? How do I do that? How do I set my goal?
Yeah. Well, first thing you have to ask you and your spouse, right, is what do I want? What do I want life to look like? So we have an acronym. We wrote this book. It's right behind me called Five Smooth Stones. And in this book, it's probably the least downloaded or read book because it's a thinking book. It means you have to actually think about it, right? And what we've learned is the world is in chaos. It's confusion, haphazard, anxious, overwhelming, and stressful, right? You look at the tax code, it's confusion, haphazard, anxious, overwhelming, and stressful. You have to actually hire somebody to figure out how to not pay somebody, which is crazy, right? Um, right? That's what you do. Like with a tax guy, you're like, hey, how do I not pay the government? And I'll pay you $2,000 to tell me how not to pay them. Right. So then there's that, and then we have to move from chaos to what I call still, and it's set your sights. That asking the questions, where do I want to be? Track your in and out, inspect your progress, look for 1%, and live deliberately. You don't just happen to become a millionaire overnight or have 100 houses. You were deliberate in buying them and making sure you did the right deal. And it's oftentimes you have to have a bigger picture, but oftentimes I'm a person of faith. I think about the idea of repentance, right? And moving from where you said you were doing to the direction you want to go, right? Making those micro adjustments. We're never going to do it perfect, but you have to have a bigger picture, and then you make the micro adjustments, orienting maybe 1%, not 100, and then you'll get to your goal, right? A policy may just fit into that, but in the end, you have to be the master, and you find the guides that can help you. But it's about making those micro adjustments, those 1%, and then you move, right? And then 1% of $1 million is still a bigger number than 1% of a dollar, right? But you're still doing the same thing, right? And so asking those goals, maybe it's buying real estate. I've learned, honestly, I've had so many floods that two in my basement at home, one in the office, that I do not want to own any real estate, not a bunch, right? Unless it makes sense for tax reasons. I like notes. So that's my goal is I know what I know me to then make the right decision. Also, I know that floods tend to find me, so I shouldn't own physical properties because water will find me.
I've got some fun stories about floods also.
Me too. I'm trying not to have PTSD or anything.
Some flashbacks, yeah. Okay, so I do agree with you 100% on everything you say, and that movement, which I think is a piece that people miss, that's the action, right? You have to actually take action to get to results. But if you're working with someone like Brandon or anybody that's going to guide you and help you, they can't guide, if you're not moving. You'll just be spinning around in the same place. But if you're actually taking steps and there's a little guidance there, then it's going to get you in the direction you need to go. But without that step, there's no hope for advisors or professionals or mentors or coaches, all the things that we all need. There's no hope for you if you're not taking that step. So another little rant there, but I really feel strongly about that. That's where I think the biggest mistake investors make is not taking that step, not taking that action. And one small step, Brandon, one small step can change your life forever. We just got to take
it. And it's movement. And when people ask, well, how do you find balance? I'm like, balance is not real, right? When you're moving, you are off balance. When you take one step, you're off balance, and then you flip to the other and you keep moving. But it's about movement. And then if you misstep, you have a team, right? And this is what I tell everybody when I talk to entrepreneurs. I say there's three things. You need to know that you know that you know that you're called to it. It's going to get hard. It's going to suck. Know that you know. Have a team around you that care about you, right? And maybe disagree a little bit. Like I'm a safe money guy. I'm going to disagree with the person that says put all of it on blue chip stocks of Tesla, right? I'm going to disagree totally. But that's okay. Maybe that's what they're good at. And then know your numbers, right? Most again, people don't know their numbers. Be able to. Maybe you're not very good at the details, but at least know how to read a P&L statement, know how to, and have a team that can help you.
Yeah, it's something we're not going to get to here, but you did put on here is helping businesses become more profitable. So that's obviously we're out of time here, so we're not going to be able to cover that. But if someone wanted to be able to do that, they would reach out to you. So here's what I'd like to do, because I did write down profit first system. Can you tell me quickly what profit first system is? Because you had a little passion around that when you mentioned that to me.
So basically, I would recommend everybody read that book. Any business owner reads that. And what it is it's a cash flow management system. In essence, what Mike Michalowicz, the founder, says is we're running so many big numbers, and we say it's like Thanksgiving all day long, right? And we're eating off of the plate, and then we wonder when taxes come due where the money went. And they're like, well, because you didn't actually put it in its bucket. So profit first, in essence, is just running a efficient business that has the right percentages, OPEX, profit, owners pay, all that stuff, and making sure you're getting paid. Right, you should be your best asset, but building that system and then reverse engineering a profitable business, and then 80/20ing what actually works and what doesn't.
Yeah, 10x is better than 2x, right?
Yep.
That's a fantastic book. Okay, so I'm going to go through my notes. You're going to tell me if I miss anything, elaborate on any of the things I wrote down here if you would like to. And then while you're listening to me, I'm going to ask you to do two things at once. So we're multitasking here, which I typically don't agree with, but you are going to multitask because I want you to tell us one final piece of advice for newer real estate investors or people that are out there doing classes, doing podcasts, doing YouTube videos that are helping the real estate industry. Okay, here are my notes. The infinite banking system, that's where we started, is really simple. It's a life insurance policy that has cash value that gives you some flexibility. So you could borrow from it, pay it back, borrow, and it really helps unlock capital to do transactions. So if you're a real estate investor, this could be a good source of capital for your deals. And there's some we didn't talk about, but there's benefits to that because it is a life insurance policy. Cash flow, it's probably, you said, the most important, although profit sounded pretty important to you as well. But you said for most people, cash flow is the most important thing to be watching. You got to know your goals. So we start with our goals. You even said, I'm surprised that's a good question because it seems like so obvious to you. So I asked you some questions about how do I set my proper goals? How do I use those goals? And you gave me this. Start with what you want. Set your sights, be very deliberate, make micro adjustments. And we talked about moving forward. You got to be taking steps. And then finally, you'll hit your goal. You got to understand that this is hard. Getting what you want. You want to be a millionaire? Great. It's not that hard to do, but it is that hard to do because you have to actually do it. That was my words, not Brandon's. You got to have a team that will sometimes disagree with you because they're looking after your best interest, not maybe just commissions. Know your numbers, understanding your P&Ls. And then finally, you said a great book for any business owner is Profit First System. So, Brandon, how'd I do?
Good. I think it's good. Profit First is by Mike Michalowicz. Really good. And there's one specific Profit First for real estate investors. I'm not an affiliate. I am Profit First certified. Again, it's all going down to cash flow. But I think you did great.
Cool. Well, I want to hear one final piece of advice, and then we got to make sure we get your contact information. So if there's anybody out there that is interested in speaking with you, they can do that. So what is one final piece of advice?
I would ask when you when you find people, there's a lot of gurus out there, a ton of them, and most of them have no idea what the heck they're doing, or they're just selling you a shovel, right? What I say is when I tell people what I'm doing with my money, this is what I do, right? You want to find people that not just saying, oh, yeah, I'm a financial advisor and you should do this and this, but they don't actually do what they say. That's a big deal. So finding people that are actually doing what they say and then vetting them, because a lot of times people are selling things that are outdated. Facebook ads, for example, is changing, and now there's courses and all this, but maybe it's saturated. I don't know. So we have to learn and say, okay, is what they taught 20 years ago advice or now? Because as you know, in real estate, it is changing like every 5 seconds. And you're like, oh, but you thought real estate wasn't going to be that crazy change, but it is, right? And so we have to be adaptable and just finding people that actually align with what you want to do and are actually doing the stuff, not just saying you should do that.
Great. I love that piece of advice. That's one that we have not had on the show before. So you own that one. Fantastic. All right, Brandon, how do we get a hold of you?
You can go to Wealth Wisdom Financial. WealthWisdomFP.com is our website. We have a YouTube channel. We have a podcast. So if you look up Wealth Wisdom Financial, you should find me. I'm talking about being sustainable and not crypto. So it's probably not the most downloaded stuff, but it's about thinking. And that's what I would say is listen, learn, be a thinker, not just a consumer, and go to Wealth Wisdom Financial on podcast, YouTube, and our website, wisdomfp.com.
Fantastic. And I am wanting to share that story real quick because I think maybe some of the listeners are like, oh, he said he's going to share a story and he didn't do it. So I don't want to do that because I will definitely get the emails will come in. So quickly, one of the things that almost took me down, like very, very close, was the way I was setting my goals, Brandon, and what I was doing. And what made me think about it is because you said one of the goals is I want to have 100 houses. Well, I used to set my goals around a number of transactions instead of a profitability goal or cash flow goal. And so I was doing deals that weren't profitable or cash flowing just so I could hit my goal of the number of transactions. So my lesson there was be very deliberate with your goals on what you actually want, and it has to be not ego driven. So that was my story.
And include others, like your spouse and other people in those goals. I'll tell you if you're stupid.
Agree. Yeah. Otherwise, you'll be alone and setting your goals to find a spouse. Okay, cool. Well, I got your contact. We're going to put it all in the show notes. Please reach out to Brandon if you have any questions about the Profit First system, infinite banking, just general financial advice. He would be a great resource for you. Brandon, thank you so much for joining. You could have done a lot of different things, and you chose to be here with us. And I know this is our second attempt because of all the snow we've both been getting, but I really do appreciate you jumping on. And for the listener, thank you. You could be listening to a million other real estate podcasts, and you chose to check this episode out. If you got some value as much as I did, or even a little less, because I got a ton of value, please 5-star review, share it with a friend. Help us grow a community to help more real estate investors just like you. And with that, I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.